Okay, you have started a brand new business, trying to bring in extra money into your household. But what do? How do you know how to sell it? You know how to make it. You know how to be successful. But the money part scares you to death. This is the top 5 things every new business owner should know when they get started. My name is Trisha Daniel, and I'm an MBA with over 23 years financial experience in public accounting and as a financial controller. So I love to share my years experience and knowledge with you. What is the first thing you should do when starting a new business? Wisdom. Gain wisdom. As 23 years in finance and accounting, I know that I can never learn everything. There's always so much. That's where I rely on wisdom of other people to gain my knowledge and learn and lean on them. I love to get it through books. I have an office full of books, podcasts, but also listening to other experts live in person. If you can get there, it just creates such an amazing relationship. You're able to get referrals, get suggestions, examples. Every new business owner, lean on someone else who has been there, lean on their wisdom. It's an amazing feat. Next in your wisdom is actually get to know the IRS. Taxes, no matter what, taxes are a part of being a new business owner. And understanding and starting to understand what you will be taxed on, deductions, is so important. So what I recommend for every new business owner, go to irs.gov. I know it might be scary, but I promise they have made it very simple to search. I want you to search Schedule C. As a new business owner, most of you will be filing your new business on what's called a Schedule C. That is a 2-page form that's included with your own personal tax return. 2 pages, 2 pages. So don't let it scare you. I want you to download it, print it out, and let's look at it. It literally shows you, 1, what money came in the door. Okay, I can count my sales that came in the door. 2, how much did you spend on advertising? Okay. 3, automobiles expense. 4, supplies. It step by step tells you the different business deductions that potentially you have available to you right there. The IRS gives it to you. So becoming more familiar with these tax forms helps educate you as a business owner. Step 2, when you start a new business, estimated business taxes. I know I went to the tax word again, but it's super important to go ahead and start reserving the money that you know doesn't belong to you and potentially you'll pay in taxes. This is my favorite tip. Set up a completely separate bank account at a bank away from your business bank account. What does this do? 1, by having it a separate bank, it provides separation. You will not be tempted to transfer from this bank to this bank. Next, it provides you a relationship with a whole separate bank for your business. Business is about relationships, and building that business relationship with a whole new bank potentially may open avenues for you, lines of credits, loans. Possibilities are endless. The most important reason why you're setting up this whole new account is because that's where you're going to reserve your taxes. Nothing is worse than having to tell a client they owe the IRS money for taxes and they don't have anything to write the check with. Nothing. Having that reserved account over here, be like, yeah, just 1 second. And being able to write a check out of money that you have set aside, game changer. So what you should do is whenever your revenue comes in the door, less expenses going out. You will have a gross profit afterwards. Take at least 20, 25 to 30% of that and reserve into a tax account. That way you have that money sitting over here to the side. So then when you work with your CPA that very first year, they can say, wow, you've already got that money reserved over there. Or, hey, you reserved too much. Or, hey, you reserved too little. And they can help you adjust that account by having that separate account that you can make in your estimated tax payments throughout the year. Game changer. All right. Number 3, as a bookkeeper, as an accountant, as a financial controller, this is my thing. You have to set up a bookkeeping system. Nothing is worse than not knowing the money that's come in your door or the money that's going out. Now, if we give our kid $20, we fully expect them to come back and tell us exactly where that $20 went, right? But how many of you can name where the last $20 went in your business? Having a way to account for the money and the revenue coming into your business and going out is vital. I highly recommend getting a bookkeeping system, whether it's QuickBooks Online, there's Xero, Xero, FreshBooks. There's several different ways to keep track of your accounting for your individual business needs. If you need any additional suggestions, just message me. But keeping up with your books every single month will make when end of the year a lot easier. Tax time, way easier, but also helps you set your goals because you've already been able to track your business. So the next year, you can make sure more money's coming in. Number 4, make sure you have the right network, meaning support system. Do you have an accountant, CPA? Do you have someone who financially advises you? Do you have women that you can surround yourself with that pour into you for encouragement, for business advice, for help with marketing, advertising, organization? The lists are endless. And if you are a single mother like me, having those people pour into you when you've been pouring so much out is so vital. So make sure that you have essential people in your network to support you. Number 5, it's time to invest. When you start a new business, the last thing you're thinking about is investing. But that's exactly what you're doing. You are investing in your future. You're investing in your legacy. But let's take it a little step further and let's actually start investing. Part of being a new business owner is the fact that you can actually set aside your own single member 401k, an IRA. Yeah, you can start having a retirement and setting it back, just like you were a corporation. So having money that you have given a purpose, whether it's $5, $10, $100, $200, knowing out of your profit margins, money that you're going to set aside and put into an investment account, that is also a business deduction. Definitely consult your financial advisor and your CPA. But by having an investment account, a retirement account, that empowers you as a business owner. My name is Trisha Daniel, and I'm an MBA with over 23 years experience. And this has been the top 5 things to do when you start that new business.